tech was obliterated today, but did you know that many of the hardest hit groups actually bottomed in May? That includes the cloud-based software stocks. When the broader averages put in new lows last month, the cloud stocks did a much better job of holding up. However, if you want to go bottom fishing here, you got to stick with the highest quality names, although even some of those aren't holding up, where you can justify coming in because their stocks have gotten cheaper as they get lower. Take ServiceNow, the cloud-based software company that helps businesses automate all sorts of information technology processes and back-office jobs. In less than 2 months, this stock has gone from 406 to 490, although it's still down more than $200 from its peak. More important, business is good, and these guys are actually profitable. We're not going to talk about the quarter, though, because it's in what we call a quiet period. But we wanted to check in with Bill McDermott, the president and CEO of ServiceNow, to get a better sense of how the industry, and actually, frankly, all industries are doing. Mr. McDermott, welcome back to Mad Money.
Thank you for having me, Jim. Good to be back.
Hey, Bill, you know, you and I got to talking in San Francisco, and a lot of times, of course, we talk about the companies, your company, but sometimes we just talk about the tone of business. You talk to more people than pretty much anybody I've ever met. Are the business people in tech as bearish as the analysts and the stock traders are about their business?
I certainly don't think so, Jim. I think the mood in the headlines is a little bit worse than the reality. If you look at tech, automation is front and center. If you have a business and you want to grow it, or you want to run it more efficiently, or you want to differentiate your brand, you're going to have to compete with tech. So automation is alive and well, and I think the prospects for technology companies, especially ones with very strong brands and architectures, they'll do very well.
There is a mistaken judgment being made, Bill, by people who have not been in the business as long as you have, and I have, which is that tech stocks have to go down if the economy, if the Fed wants to punish the market, slow down the economy. In reality, you bring in tech when you're being hurt by the economy. Tech is what makes it so you can still have good profits. What happened to that thesis that's being ignored by these young portfolio managers?
Yeah, it's true. I mean, I see some of the more seasoned ones saying move away from energy and commodities a little more towards tech, since now the multiples have been, really, really brought into a very attractive range. But the bottom line is this. If you look at the world through the CEOs out there, they have to deliver great experiences for their customers. They have to make their employees happy, and all the relational issues, not just bonuses, but people care a lot about cultures now. And you can't build a great culture without serving your employees in moments that matter. And ultimately, you have to innovate. You have to do it on the fly. So tech is going to be front and center through all of this. But, Jim, I think one of the things that's going on out there is these macro crosswinds are blowing strong. You're at 41-year high inflation. The dollar right now is the highest it's been in over 2 decades. We have interest rates rising. People are worried about security. You got a war in Europe. So the mood is not great. But there's no way out except to innovate and drive technology in your company so you digitize your processes, you move faster, and you ultimately win.
Well, that's what I'm talking about. Bill, you're describing a counter-cyclical situation. You're describing something that comes in and makes it so you can better handle what the Fed is doing. So it's not the first. You don't cancel ServiceNow or Salesforce.com or your old guy's SAP or Oracle or any of the companies we deal with. And I know some of those are competitors, but I did that because you can't afford to rip them out. You have to put more money toward them in order to be able to take advantage of the situation.
That's totally true. And if you look at the hyperscaler clouds out there today, on the infrastructure side, they're all doing very, very well. The well-known brands that you mentioned, they're going to be around. They're not going anywhere. But there is one serious change that's going out there right now, and that is there's a new level of prioritization in the enterprise. And I have seen this actually since we last met, Jim, hitting a new gear, where companies are first saying, which platforms do we want to bet on? And then how do we stack rank the priorities? Because they're capacity constrained, so they choose the projects that they want to go after. But there's one filter on all of this now, and that is fast return on investment. And if you can't put an architecture in there that gives the customer a fast ROI, chances are you're going to get postponed or moved to the left side of the list as opposed to the right side you want to be on.
All right, so Bill, then let's go full circle here. We've established that CEOs aren't as necessarily as gloomy as Wall Street. But one of the things I think that is true is the CEOs are having a hard time working with government. I think the CEOs are a little more progressive, more can-do. Government, I'm not talking Democrat or Republican, I'm talking both. The government seems to be more of a stumbling block toward growth than the corporations. Am I too pro-corporate in that way of thinking?
Well, I think you're onto something here. I mean, the crosswinds that are blowing are strong enough that it's probably moving people off their mark a little bit. And it's now time to reprioritize what really matters. And you can't be swayed by the news and the headlines of every single day. Get back to basics. So what are customers that I talk to thinking? Hey, they're thinking about how do I build a great business?
Right.
And government has to run like a best-run business. How do you serve the citizens?
Well, you know what? I mean, I think you really nailed it. I think there are a lot of business people who want to keep their head down. They don't want to assert themselves. They're afraid. They're doing everything they can to stay out of the news headlines. They devote more time toward that than they do making the calls that they need to get the business done.
Exactly. You know, Jim, you talk to a healthcare provider, they have to care about their patients. You talk to a retailer, they have to think about direct-to-consumer. Are they coming in my store? How do I serve them? You talk about B2B. I mean, the B2B world, if you read any of the research reports, the enterprise businesses are very strong. Of course, you're going to see the headwind of the dollar right now against well-known technology brands. You've seen that, Jim. No one's going to outrun the currency right now. And probably when you think about energy and the dislocation caused by the war in Europe and this reprioritization I'm talking about, you're going to see longer cycles in Europe. We saw that.
Right.
But this doesn't fundamentally change the narrative that tech is the only way to cut through the crosswinds and ultimately get to the other side.
Oh, thank you for saying that. I mean, I've just been beating the drum that this is counter-cyclical. It's the right time. I felt like to have you on would be great since I felt very alone. Bill McDermott, thank you so much for coming back on the show. Really good to see you.
Thank you. Thank you, Jim.
Remember, we had Bill on to give you the temperature of things. You know I like ServiceNow, the stock, but I just think the idea that technology is somehow superfluous right now is completely wrong. Bill McDermott, ServiceNow, President and CEO. We have Money's back after the break.
Coming up, today's chartist is a master of a key metric that could make you money. Stick around. Kramer is tackling the technicals next.